Alright guys, in this video I'll walk you through a couple of my scalping trades which didn't really go, at least one, as planned. So starting with the 15-minute chart, we've got this 21,000 swing low and swing high, which clearly after this reversal up top defines this massive 800 points range. Now notice the rebalancing that took place after this 700 point decline, which following the pump through and break of this structural high at the 690 level would logically suggest a major breakout, as indicated by this 100 points or so demand bar. We also have price spooling higher here from this point, indicating that the market may want to keep printing higher. However, while it's fine to have a bias and everything, I think it's crucial not to enter a trade unless your setup clearly presents itself. In my view, that's not the case here. Now, why do I say that? Well, because as we all know, trading ultimately boils down to three key questions about price movement, which are where the price is originating from, where it is now, and where it is heading. I think that the first one is easy to answer since we know the shift occurred at the 21,000 level. As for the other two, where the price is currently trading and where it is heading, I do believe they share one clear answer. The market's structural shift at the top, driven by the stop hunt zone, confirmed in my view that the breakout at the 690 level was a fake move. At the same time, this buy rate pattern or stop hunt zone, both obviously referring to the same concept, resulted in a 140 point dip. This dip, which as you can see created these two imbalance areas, I think a dynamic that shows additional directional cues, invalidated this breakout move, further emphasizing, in my opinion, the market's bearish tendencies. On top of that, I think it's important to note the obvious here, which is the market is clearly overextended with no significant pullback or relief in the past 3 to 4 hours. This confluence that we have here, including again the 100-point breakout bar, which I now view as a trend capitulation signal, confirms in my view trend exhaustion and suggests at the same time the potential for a deeper retracement or even an accelerated reversal. Simply put, guys, we are overbought with a 50% fib level aligning at 400 and currently trading at a zone that demand-wise is, in my view, unsustainable. That's why I decided to pull the trigger short at the 690 level. Now, initially, and as you can see, the trade moved in my favor, and I was nicely in the money. However, and let me quickly switch here to a 2-minute chart to sort of better illustrate this. However, the tide turned. The market makers, as they often do, opted to engage in supposedly further price discovery as they began to target additional liquidity, and that dynamic obviously led to me getting stopped out and taking, I should say, a pretty sizable loss. Now, even though I ended up at this point losing nearly $1,000 on this short, I didn't let frustration or emotions take control. Sure, there is no denying I had my screw the market makers moment, as a price discovery move felt really like pure manipulation given the market conditions. I mean, we clearly had a capitulation sign here that typically leads to a sharp and sudden decline in prices. However, I stayed rational and focused on the bigger picture. Why? Well, because I knew the setup was solid and rooted in sound logic. In other words, my bias was correct because all the key variables in terms of objectively evaluating the trade were present. I mean, the setup was textbook. I had a parabolic move that formed a well-defined and easily identifiable range. Also, the strategy itself was based on several key technical factors: a fake breakout, overbought levels, the formation of a buy rate, and the invalidation of this fake surge via a rebalancing dip. Now, these elements all pointed to the unsustainability of this overstretched upward move. Also, I have to point out here that, despite the red on my account and the fact that the outcome didn't go my way, I trusted the setup, knowing that consistency in following these proven principles is what ultimately matters in trading. That's why I initiated a second short position when price tapped into this imbalance area up here, driven by the same key technical factors. The market showed clear signs of exhaustion and stalling, and the earlier price movement was simply a liquidity grab by market makers rather than a genuine price discovery. Now, initially, as you can see, I experienced some drawdown. However, the price eventually reversed and began moving lower, signaling the potential for the next leg down. Soon after, the market broke through the 660 support level, confirming my initial analysis of the market's true direction. By the way, guys, if you found value in these trades or price action analysis, please don't forget to catch my next video for a deep dive into similar setups and strategies. Alright, gang, thanks for watching, and as always, hope to catch you all in the next one.